Today, I'd like to talk a little bit about first meeting introduction, like a script, or it's also called like elevator pitch, to talk to the investors that you would like them to listen to you, build relationships, and also invest with you if some property comes across and you are syndicating. This way, you could also find angel investors, sophisticated, non-sophisticated, accredited investors. So let's talk about it. Where do you find these people? You can really find them actually at Chamber of Commerce meetings, Rotary meetings, investor groups, meetup groups, and also the RIA meetings. These are great places to build relationships. The first impression is so very important. You are selling yourself and you only get one chance, just one chance alone. Be prepared. Be sure to rehearse the elevator pitch in front of the mirror so that you have it down pretty quickly. Please make sure that you are dressed appropriately for the audience you are going to speak to or talk to in these meetings. And I also, investor meeting where most of the people were wearing jeans and dressed casually, did not wear jeans. I wore a nice golf shirt and a pressed pair of cotton slacks, just a slight notch above the crowd. Please talk slowly. Do this with conviction, resolve, and confidence. And practice at home, like I said, or in your car, and listen to yourself, and then you'll see that how effective you can become. Remember, the goal of this first introduction is to create enough interest so that you can send them your accredited investor form. Once you receive the signed and the completed form, you can call them and meet personally to discuss more details about what you are doing and how you are setting up your deals and so forth like that. So what is the basic introduction? This is just one that I use. Hi, my name is so-and-so. The name of my company is so-so. We buy commercial real estate in emerging markets. They produce good cash flows with a strong back end. I am always looking for partners, and I'm willing to give you an equity position. If you would like more in details, I would be happy to talk with you. Very simple approach, that you do buy commercial real estate in emerging markets. They produce good cash flows. Cash flows are during the property when you are keeping them, and then the strong back end is the equity gain. You're looking for partners because they'll be partners, and that you are also willing to give them equity position, not a debt position, which is just like you're borrowing the money at a simple interest rate that you're paying them back. It's not that. You're getting them an equity position. We are giving them the cash flows as well as when we sell the property, the equity gains. After this very short introduction, some people will be interested in knowing more, and here are some key phrases to throw out into your conversation. Every conversation will be a little bit different, but the results should be same. You're piquing their interest. And the key words that you want to use are, we take a conservative approach. That's a good one. People like to hear that you are taking a very conservative approach in very detailed underwriting about the project that you undertake for syndication. If you're interested in investing, I give my investors the majority of the cash flow and the majority of the equity. I want you to have a lot of incentive to participate in my deals. That's another one. We only buy in areas where there is a predictable path of progress, where the jobs are coming, where the new businesses are moving in. And we do a lot of research with the local Chamber of Commerce, economic development groups, the U.S. Census Bureau, and they provide us a lot of extensive information that we have to use to identify where we are going to be acquiring our investments. We like to buy B and C properties in A and B areas. Actually, we like to buy most of the time B or C properties in A or B areas. That's the best way to do. Whatever you are doing, both value play and a momentum play. Now, value play is when you're putting some renovation dollars and you're able to bring the value of the property higher, more rents and things like that. Momentum play is when it's already cash flowing. It's not that you are repositioning where the investors will not get some kind of cash flow for 6 months or a year, but it's a momentum play. It's already working, and we are able to nicely start paying them the cash flows. It's a turnkey project, we call them. It's 90% occupied or 95% occupied. We have plenty of opportunity to increase the value of our investment. We typically want to be in and out of the marketplace within 3 to 5 years, depending on where we come in the cycle. And that's the emerging cycle. You can kind of explain them. And when you meet with them, you can really teach them and show them several different ways. Handling objections, you should not answer until you have signed that investor qualification form or accredited investor form, because you want to know if they have any money or so forth like that. If you want to establish a relationship, then only it's worth it. Oh, how much do I need to participate in your investment? What kind of returns are you paying? How much money can I make? And these are some of the questions. This is an opportunity to close with the accredited investor form. Say, since our company is SEC, Securities and Exchange Commission compliant, we follow all the rules and regulations set forth by SEC. What I would like to do is send you the accredited investor form. Once I receive it back, signed and dated, I'll call you to set up a meeting, maybe lunch or over coffee, to discuss the details of the business, including how all of this will work, the kind of returns, etc. I can answer all your questions at that time. This is the close. Please make sure you get their contact information so that you can send them the form and follow up. Once you receive the form, you have closed one of the most important parts of getting your deal done. And also keep track. You want to start like an Excel worksheet or something, so that each investor that you meet, or when did you meet, what was the first meeting, second meeting, keep track of all those and comments and so forth. That will help you a lot. Keep on getting all these people in your database and keep them warm and with newsletters and articles and things that you want to send their way. So good luck to you.